delivered what we set for the year. For the quarter, yes, there have been, some, as Sean pointed out, there are certain cable cuts. This is the first time ever that we had 3 cable systems go down in this year, all together at the same time, various issues. Also, the time to repair was unusually long because of the geopolitical conflict and things that we all know of. So those were the costs. We did launch one of our cloud platform Tata Communications very recently as well. So there were a little bit of a step up in marketing costs. So I would say when I look at the delta of what is the drop of margin from previous quarter to this quarter, quite cognizant of the cost that actually went in and completely in control.
But okay, appreciate that. But did you in the previous call speak about your ambition to improve margins to previous levels of 23 to 25, and therefore is that a possibility in FY26?
We will make progress towards that, Neeraj. Our ambition of 23 to 25 stays, right? I mean, I believe that this business should operate in that particular range. If we unpeel, why did we depart from when we were at the middle or north end of the range a couple of years ago? We departed for 3 reasons. We departed because we made acquisitions. We made 3 acquisitions, and all 3 were loss-making acquisitions. So the mathematics of it took about 3.5 to 4 points, down just on account of that. From the very top end, at like 25 that we were, declaring a few years ago, I mean, that was because of COVID savings, and all of those things have now vanished, and we've now come back to, normalcy levels. And then finally, as outlined in both in the Investor Day last year and also in subsequent quarters, we are making continuous investments organically as well, right? We are investing about $65 to $70 million of organic investments in fueling innovations, including, we talked about AI cloud and launching of our AI studio. All of this are not yet yielding, revenue for us. So these are all in the investment phase for us. Are these the right thing to do? Absolutely, yes, because we are in the digital space. And if we do not fuel innovation, we will become irrelevant in a couple of years' time. So I wouldn't be myopic about what is the margin today, because these investments are being made to keep us relevant with our customers.
So that's the management of Tata Communication. Gaurang, how are you looking at a Tata Communication, and would you advise a buy or a sell?
Well, to be very honest, and as a disclosure, we've been positive on Tata Communication for a very long time. And I'm quite pleased with the kind of business outlook and the commentary that was mentioned by the management. It's one of the essential companies in terms of enabling high-end technology communications. Targets that we have set aside, Hiral, is somewhere close to about 1900 plus. This is purely on the fundamental long-term view.
View coming in terms of Tata Communication as well. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
.361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The second buy pick is in Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity, because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Versus 3-day record rally. HDFC Bank weighs on the markets. The Nifty and the Sensex come off the lows of the day.
A delayed summer and fierce competition in the cables and wires industry could hit demand in the current quarter, says Havells. The management also tells NDTV Profit that they are expanding capacity of their cables division. The stock is down 3%.
And more skeletons tumble out of the Jensol closet. Co-founder Anmol Singh Jaggi misled shareholders about an alleged sale of Blue Smart to private equity firm Eversource Capital.
Then what's driving the rally in FMCG stocks? Cheaper valuations and the expectations of improved demand this quarter. Now that the income tax rebate kicks in.
And this is what the terrorists look like. Sketches of 2 out of 3 gunmen has been released by security agencies. A massive hunt is on to find them. A separate gunfight broke out at the line of control in Uri as infiltration was thwarted by Indian Army.
Welcome back. You're watching Profit Buzzers on NDTV Profit. We now move on to the Civil Aviation Ministry and DGCA ramp-up rescue efforts. Airlines have been directed to maintain regular fares and extend full cooperation. My colleague Aishwarya Patil joins in with more details.
Well, as the investigation and rescue efforts in the Kashmir Valley continues for the victims of the Kashmir terror attack, the Civil Aviation Ministry has directed airlines to extend their support for affected tourists as well as victims of the Pahalgam terror attack. Now, an urgent meeting was held with airline operators for a strong advisory being issued towards surge pricing as well. Airlines have been directed to maintain regular fares and extend full cooperation to all the victims as well as passengers who will be flying in and out of Srinagar is what the ministry has said. And as part of the immediate relief measures, 4 special flights from Srinagar, 2 to Delhi and 2 to Mumbai have been arranged. Additionally, on standby will be few more flights to evacuate affected tourists as well. Now, that is as far as the Civil Aviation Ministry is concerned. From the airlines part, they are offering, they are making more efforts to evacuate the victims of this terror attack. Air India, as well as Air India Express and Akasa and Indigo as well, all of them have promised fee waivers, free cancellations as well as rescheduling to all the flyers to and fro from Srinagar. And as far as Air India is concerned, Srinagar to Delhi for the 23rd of April, 11:30 am flight was scheduled, and Srinagar to Mumbai at 12 noon flight was scheduled. So until 30th of April, most of the airline operators have extended support in cancellation, fee waivers, as well as rescheduling of flights. We are still here to yet to hear from SpiceJet, but that's that as far as the airlines are concerned. DGCA also has told airlines to increase the number of flights in response to the heightened demand and to ensure uninterrupted connectivity for to and from Srinagar to various destinations. Airlines have also been told, as I mentioned earlier, to waive cancellation and rescheduling fees. So that's the update as far as the support to be extended to the victims of Kashmir terror attack from the Civil Aviation Ministry as well as airlines and DGCA.
Thank you, Aishwarya, so much for getting us the details. And thankfully, special flights have been organized, as Aishwarya was mentioning, to and fro from Kashmir. But moving on, let's get back to what the markets are doing. You have a Havells India that is in focus. Now, what's interesting with the Havells India is that it's a strong beat in terms of numbers. However, the stock is what is trading under pressure. What is it that the street is concerned about? That's the key question, for which Mahima joins us with more details. Mahima, we know what the numbers are looking like in terms of the quarter. What viewers want to know right now is as to what is concerning the street and what is putting pressure on the stock.
Right, so there are a couple of things, Hiral, as to what's not working for the counter or what the street is not liking. The first thing is that the management has come out and said that summer is set in with some delay this season, and this will impact the overall sales as well as particularly secondary sales in the RAC category. In terms of the overall demand scenario, that is also soft in FY26 going in. Cables and wires is seeing an increased competition with recent players making entry into the cables and wires segment, and inflation and commodity volatility remains something that will warrant for a caution, and that might go ahead and impact their margins and overall profitability as well. Now, in terms of what brokerages are saying, well, Nuvama has reiterated buy with a target price of 1890. They've raised their FY25 to 27 estimates by around 4 to 5%. They've forecasted a revenue CAGR of 16%, EBITDA CAGR of 20% and PAT CAGR of 22% over FY28, and they're valuing the stock at 52 times. Whereas City on Havells has maintained neutral but hiked the target price to 1900 from 1950. What they're saying is that they see profitability pressure led by relatively slow growth in switchgear and higher growth in low margin products, and they seek a better entry point as compared to the valuations that Havells is currently trading at versus the valuation that are already factored in with respect to where positives for the counter are concerned. Lastly, Jefferies on Havells have also maintained hold and hiked the target price to 1800 from 1740. They're saying that although Q4 was a strong beat, inflation and commodity volatility are key monitorables to watch out for in the near future.
Right, so that's with regards to where Havells is concerned. Gaurang, how are you looking at a Havells India, and with all the competition that's coming in the cables and wire segment, though the capacities will come on stream much later, how are you seeing the sector pan out along with your call?
Well, to be very honest, after we got the news of new entrants coming in the cable and wire business, the existing management companies came on various platforms and said that there is enough opportunity, enough space for many more players to come and do the business and everyone coexist together. It is not going to be a big negative for the existing players. Point number one. Point number two, as far as Havells is concerned, again, a prudent disclosure. We have a target somewhere close to about 1900. Near-term headwinds may be there in terms of what the management commentary is, all about. But long-term, we do believe that there is a lot of opportunity, both in terms of discretionary and non-discretionary spend. And Havells happens to be a very dominant player in the northern market. And along with that, they are able to garner or capture much more market share in the other parts of India. So we remain optimistic. And like I mentioned, 1900, I think risk reward is extremely favorable from a long-term point of view.
So risk reward favorable in terms of Havells India. Brajesh, in fact, let me also welcome in Brajesh L, who's from IDBI Cap. Brajesh, good afternoon and welcome to the show. Your view with regards to Havells India?
Yeah, afternoon. So basically, even I believe there will be a positive bias in the Havells. Maybe on an immediate basis, some profit booking can be seen because for the last 2 weeks, there has been a consistent gains in the Havells. Some sideways consolidation and gradually 1750, 1800. That would be my technical view. So yeah, I would be betting for 1800 levels. So maybe on a slighter correction on a little, maybe somewhere close to 1580 level. So I think I would like to take the buy trades and would bet for 1800 on the higher side. So view is positive.
Got it, Brajesh. Thank you for giving those details. But we also have Agni joining us. Now, Jensol Engineering has been in focus for a while now, and Agni has some new details in this entire fiasco.
As you know, there have been media reports floating around which have been saying that Anmol Jaggi had sent out an email to investors of BlueSmart painting out 3 options on how to take the company forward. Now, the email mentioned one of the options as a slump sale of the ride-hailing business to Eversource Capital. However, me and our colleague Tushar, we tracked that Eversource is unlikely to have ever been part of this conversation. In fact, the last time they ever valued Eversource was in the last calendar year, so that's at least 5 months ago. And even then, there was no binding agreement to acquire any of the company's businesses. Also, the PFC's complaint against Jensol at the economic offences wing is likely to have soured sentiments with the other options that Jaggi had put forward to the BlueSmart investors. Now, remember, till this point, the entire Jensol BlueSmart fiasco was a regulatory problem. Now, with the EOW coming in, it is becoming an executive level problem. So, in essence, a third of BlueSmart's fleet is now part of a police investigation, which is something which investors or potential investors are not looking at kindly. So Anmol Jaggi's email then seems to have misled investors into making them believe that the company BlueSmart is going to survive and is likely to come out well and good, but as we are bringing you the details, that does not seem to be the case. Now, we have reached out to Eversource and BlueSmart for comments on the story, but this is a developing story at this point, so do stay tuned.
Absolutely. Thank you, Agni, for getting us the details. In fact, it's no point taking a view from Gaurang or Brajesh on a counter like this right now. But moving on, let's talk about 2 companies which have announced order wins. One is Ashoka Buildcon and the other one is Suzlon. My colleague Anushi joins us with the details. Anushi, what do the order wins mean for both these companies?
Right, so I'll start off with Ashoka Buildcon first. Now they have received a letter of acceptance award for a 569 crore project from the Central Railway. Now this is pertaining to construction of bridges, minor bridges, along with some miscellaneous civil works that are into play for the company's order consideration that we are seeing. Considering this project size, the order execution is to be executed within the next 913 days itself. Now do note that the company has been in focus on a couple of order wins that we've seen in this last quarter and this recent 2 months period that we are looking at. Order book, if we see as of December 24, that stood at around 16,457 crore. The second stock that I want to talk about is Suzlon Energy. Now this is in focus as the company has received a 378 megawatt of a wind project from NTPC Green. The company is set to supply 120 S144 wind turbine generators for the company, and the project is to be executed in the Gadag region of Karnataka. Now do note that this is the second order that the company has received from NTPC Green Energy in these last 8 months that we are looking at. So these two counters in focus on the back of these order wins.
Right, so that's with regards to Suzlon, which is nearly at the day's highest levels, and Ashoka Buildcon. Brajesh, what are charts indicating for both these counters?
So specifically, Ashoka, I don't believe there will be much of an opportunity. Whatever the news we heard, so it is going to be more of a sideways. So I think it nothing too much on the charts. Some small bounce can be there, but then I don't think that can be a trading opportunity. But in case of Suzlon, I think that there can be some strength, because I think Suzlon is at the verge of giving some reversals. And I won't be surprised if Suzlon goes back to 70, 75 levels. That can be immediate upside, maybe over the next couple of weeks. But then structure for the Suzlon is positive, and I think that we should be seeing some good bounce into Suzlon.
Could be coming in terms of Suzlon. In the last 3 months, the stock has seen gains of nearly 10%. Gaurang, any view in terms of Ashoka Buildcon as well as a Suzlon?
Unfortunately, we don't have current coverage. We used to have coverage on Ashoka Buildcon, but our targets were in place, so we've dropped the coverage. But on Suzlon, I concur definitely over here. We do have fundamental coverage on Suzlon buy side. Somewhere close to about 71 is the target over here.
Got it, Gaurang. Thank you for that view. But you know, over the last 6 months, years, banks have outperformed significantly. The Nifty bank clocked record highs yesterday, and we have Harsh joining us talking about what's driving the rally in the banks.
First off, you're seeing an easing regulatory environment. At least over the last 2 to 3 months since the new governor has taken charge, you're seeing the RBI take proactive steps to try and ease the regulatory burden, which is already or which was difficult for lenders in general, at least over the last year or so. The second piece is obviously on liquidity. As part of the same breath, liquidity has eased substantially. Now you have better visibility even on an asset quality. You know, there are visible signs that asset quality likely is improving, is getting better in the few pockets where there have been concerns. One is microfinance, the other one is unsecured lending. The third one is obviously valuations have been reasonable for some time now. But with some of these headwinds receding, the valuation suddenly looking really good because the headwinds are coming off. And that's what's really standing out as well. The fourth piece is growth likely to pick up. Better liquidity conditions. Also, you are expected to see new draft norms of LCR actually benefit some of the lenders, and therefore you might likely see more upside to credit growth over the next year or so. That was all that came through yesterday. And the fifth piece is FII buying. That's happened for 5 sessions on the trot for the first time since September of 2024. So after a 6-month span, we've seen FIIs come back and buy, which is obviously positive for lenders because that is the largest go-to place for FIIs, and it has been under-owned for a while now. So just a combination of all of those factors playing out.
Thank you, Harsh, for giving us those details. Brajesh, I'll come to you first. Let me start off with how does the Nifty Bank look to you on the charts, and if there are any counters in the BFSI space that, you know, seem attractive on the charts?
So basically, if I talk about the index, I believe today for the very first time we are seeing some selling, and even from the directional point of view, I think this 56,000 till the expiry is done, and we see a very clear picture on the Friday. This level of 56 is going to act as a resistance, so the risk reward ratio is quite favorable to take some short bets, maybe from the trading perspective. And there are like stocks like, for example, just to continue with Bank Nifty, 53,000 was the breakout level. So as long as we don't break 53, the directional move on the Bank Nifty will stay strong. But since we have seen a good amount of rally, like close to 12% kind of a rally from the swing low, the recent low, some profit booking is expected, and that too specifically Bank Nifty around 56,000. So on the stock front, I think we should be taking a bet on the SBI, because SBI has recently seen a very good breakout, and now yesterday almost at 830 level, and now it's correcting a little bit back to the 800 levels. I think it's again a re-entry kind of a structure where we should be thinking to take the fresh longs. And to some on the way down, whenever there is a slight profit booking in the HDFC and Kotak, I think we can look for some opportunity. Maybe we will avoid for next 1 or 2 trading session, but then gradually when the Bank Nifty comes close to 54,000, I think we should be looking for the fresh buy trade setup in the banking stocks.
Got it. Gaurang, if I come to you, your top pick in the banking space currently?
Well, so before I answer that, Mika, what we've been advising at Geojit Investment Limited is that if you do have a dedicated portfolio in the equity market, I think it's going to be an integral part of the portfolio to have a dedicated allocation towards BSFI segment, especially focusing on private sector banks, public sector banks, and strong NBFCs. Our view is that there has been a sizable amount of improvement in the gross and net NPA. Provisionings are coming back, NIMs are maintained and moving up. CASA ratios are also very, very stable. You have interest rate cuts coming through after 5 years of pause. We expect 2 more rate cuts to be in the system by the time we end this calendar year, December 2025. Top picks amongst, there are quite a few, but if I have to name a couple of them, then the public sector bank, I think State Bank of India and Indian Bank. Private sector banks, Axis comes out with the numbers maybe about tomorrow or day after, correct me if I'm wrong. But whatever we've seen up till now, HDFC and ICICI Bank preferred picks. Amongst the NBFCs, other than Bajaj Finance of the world, I think Cholamandalam and Shriram augurs extremely well as investment idea from a long-term point of view.
Right. So Shriram Finance could be one of the picks, as well as Chola Finance, another one that you should be watching out for. But shifting focus, a relief coming in for manufacturers of a chemical called aniline, which is used in pharmaceuticals, dyes, and polymer manufacturing. Now, in a move against China, the center has extended anti-dumping duty on this chemical. Varsha has the details. Varsha, if you could help us understand, what are the details in terms of the anti-dumping duty impact and how does it benefit?
Yeah, thank you for that. So already there was an anti-dumping duty on aniline from China, but now this has been extended for next 5 years. Now this product is used in pharmaceuticals, in your polymers, in your rubber chemicals as well. The amount of the anti-dumping duty has not been changed, which is $36.9 per metric ton. And if I were to talk about the impact on companies, according to B&K Securities, this continuation is neutral for GNFC, who is the domestic producer of aniline and which contributes significant revenue to the company. And this is also neutral for the other user companies like Ather Industries and NOCIL, which use this product as a raw material for manufacturing other chemicals. The ADD, as I said, was already in effect and the quantum hasn't been changed. Just to give a little bit background, domestic manufacturer GNFC had claimed that Chinese imports harmed local production and therefore the anti-dumping duty was imposed, and had argued for government intervention through anti-dumping duties, and DGTR hence had initiated the sunset review due to the concerns of continued dumping.
Thanks, Varsha, for getting us the details. So let's quickly pull up 3 stocks, GNFC, NOCIL, as well as Ather Industries, and see what the 3 counters are doing in trade as we speak. GNFC, though, is under pressure with cuts of nearly 1.5% coming in there. NOCIL as well as Ather Industries are 2 other stocks. Marginal gains on that one. Brajesh, from the 3 stocks that Varsha was mentioning, anything that you like on the charts, because the news is in a way positive. It's a neutral impact, but 2 out of the 3 trading under pressure today.
Yeah, I do agree, but then GFC is some stock where already the stock is forming some base formation, and the stock is likely to see some bounce in the near term. So GNFC is something which I can keep a watch on. No seal, I'm not too much of comfortable, and even on the RP, I will not take that view. Maybe GNFC is what I can keep a watch on, and it will take a good amount of time. But then slow and steady, I think it can go back to 600 levels. So there can be one opportunity in GNFC.
Okay. Gaurang, your view in terms of the anti-dumping duty that is coming in on aniline?
So keeping this in mind, I can comment on one company out of the 3, and that is Ather Industries. That's in the specialty chemicals space. And my sense, Hiral, is that the government will definitely take all appropriate steps, whether it is to do with countervailing duty or the duty on the metal, steel, or whether it is to do with any kind of ingredient into specialty agrochemicals. There is going to be a highlighted activity as far as dumping is concerned all across the globe, more so in India, because we have very friendly countries like China, Vietnam, Taiwan, etc., who are eagerly waiting to dump into India.
Got it, Gaurang. The next, stock that we are focusing on is the big brokerage call, and that's Ambit, which is bullish on something like a Flair Writing. It's initiated a buy rating with a target price of 400 rupees. We have Mahima joining us with the key details of the same.
Right, so as you rightly mentioned, Ambit is bullish on Flair Writing, and on the back of that, the stock is also seeing significant up moves in trade today. It has initiated buy with a target price of 400 for the next 2 years, so that suggests an upside of almost 56% from its yesterday's closing price. Now, in terms of what are the reasons as to why Ambit is bullish on this particular counter, they're saying that growth will be driven by premiumization in this particular stationery space. Brand, pricing, and distribution are critical success factors for something like a Flair Writing. They're saying that Flair Writing right now is sitting on reasonable valuations, and a growth turnaround strategy is something that they're expecting from the counter. Non-paper stationery industry offers an attractive overall industry dynamics right now, according to them. Consistent innovation, high quality product, as well as low cost and wide distribution are the factors to watch out for. And premiumization, like I mentioned earlier, they've also said that that will be a key growth driver, and overall it's ranked lower versus that of other FMCG categories according to Ambit. So these are the reasons as to why and what makes Ambit bullish on something like a Flair Writing.
Got it. Brijesh, I'll come to you. Flair Writing on the charts, is the call bullish there too?
Not exactly, because I'm not at this point. Maybe fundamentally I don't know, but from technical point of view, I'm not that convinced whether there can be a turnaround story. There has been a good amount of distribution at the level of 300. So as long as this stock doesn't sustain a very strong base about 300, 310 level, I think that reversals checking on the reversals will be a little bit difficult. This has been in a downtrend. Maybe the risk reward ratio would be favorable, but there is no clear pattern or maybe a breakout which suggests that we should be jumping guns. So basically, I would just wait for more confirmation. And 300, 305, that odd levels. Once we see a very strong weekly close above those levels, then I might take a pause.
Right, so that's the view coming in with regards to where Flair Writing goes, but completely out of time. Thank you, Gaurang. Thank you, Brijesh, for joining us on the show and sharing your views. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The second buyback is in Naukri Info Edge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
To India specifically, I really think India has a fascinating opportunity, because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations?
Strong quarter by Waaree Energies. No surprise, but yes, there are a couple of surprise elements in that. The shoring up of margins has been, or rather not the shoring up, the outperformance on margins has been very, very strong. Amit Paitankar, whole-time director and CEO of the company Johnson, right now to talk about these numbers and the outlook ahead. You couldn't have found a fault, Amit, with the kind of delivery that you have done, or is there something that you thought you could have done better in the quarter or for the year?
Well, there's always room for better, Neeraj, and that's relentless pursuit of excellence and performance that's what we at Waaree try to do. But a great quarter for us and a great year for us. I would say almost a breakthrough year. And the primary drivers for that have been the demand and the customers and the trust that the customers have bestowed on us. The financial capability to put up factories and capex, and then of course to execute those projects at scale and at speed, and then ultimately deliver to the customer. I think that's been the not so secret sauce to get this thing done.
Yeah. Okay. So let me start with the good part, the margins. Okay. Let me start with the top line. Chalo. I mean, good quarter, good year. You have the capacities out there to execute. Is the order book addition looking accretive enough for you to be able to meet the numbers that you guys have been talking about? Or and parallelly there, the order book addition for Q4, was it a bit lower than what you estimated?
So the order book is very strong. It stands at 47,000 crores. And that again gives us the confidence that 26 is going to be a very, very strong year. Again, customers, the first reason, they have bestowed their trust on us. And that's why we have the 47,000 crore order book. We have new capacities planned. So 3.2 gigawatts of, and you have been to the Chikli facility. We are going to have 3.2 gigawatts of addition to our module capacity. Our 5.4 gigawatts of cell manufacturing is going to be fully functional. And we have the financial muscle to ensure that all of these projects move fast and on time.
Yeah, most certainly. I mean, it's not often that we meet a company which is large in size and so averse to debt, and having the capability, therefore, to raise debt and leave out projects if the cash flows don't quite meet up. But I know the order book is good, but was the order intake a bit weak, or was it a anomaly for the quarter?
Not really. The order intake is something that we execute on, like we execute on all the other projects. We look at orders in much the same way. We have a pipeline that we can see right now of 100 gigawatts worldwide. And so there is no dearth of business at this point in time. And our disciplined sales team is always ready to ensure that our order book continues to hover around the 45,000 to 50,000 mark.
Okay. Fair call. Margins, exceptional performance there. Now the question only, Amit, that comes in, it almost seems meteoric, if you will, quite unreal to have this kind of Q4 margin performance that you've done in. Is this a new normal, or was this a one-off and you will revert back to slightly lower levels?
So if you really look at our P&L, if you really look at our P&L, right, this is the year where actually a lot of leadership changes have happened. And a fair amount of, I would say, SG&A is actually now baked in. And that structure is not going to change as much. Our expenses from a factory perspective are also pretty much going to remain constant or, raise in line with the revenues. So overall, costs are going to be very much where we want them to be. And we will therefore expect margins to continue the paths that we are seeing. And that's the reason why we have this EBITDA guidance, right? We have gone ahead and we have said that we will have 5,500 to 6,000 crores of EBITDA. And we are confident about that.
Yeah, but because I'm not able to quite match it at short notice with the revenue numbers, am I hearing you tell me, Amit, that you might actually log in annualized FY26 margins at around 20% or northwards of that?
The way we are going to manage the business, Neeraj, is a razor-sharp focus on EBITDA. That's an important controllable parameter that we have in our hand. And we have, broken that down internally into detailed matrices for almost every CXO to go and chase. And so that's how we are confident that we are going to deliver the EBITDA numbers.
So northwards of 20% for FY26 as an average?
I would say let's take home 5,500 to 6,000 crores of EBITDA that I've talked about.
Come on, you might do very well on the revenue front and then the margins may not look that great. So I'm trying to pin you on one of the two things.
I know you are, but I'm not taking the bait, as you can see.
Okay, fair call. Let's work with the actual numbers. Okay, fair call. The 5,500 to 6,000 crore. But broadly, you believe that the trajectory of margins is sustainable without getting into an exact number. You
100%.
Believe it's higher. Okay,
100%. Okay. And the reason for that, like I told you, is we have clear sight on costs. And we have clear sight on top line. And so the P&L, as it is going to evolve throughout the year, is pretty much crystal clear in front of us.
I was talking to somebody who tracks you very closely, and the person mentioned that there has been significant working capital improvement as well. I wasn't able to see it, but has there been, and what's led to that?
Again, strict financial discipline. This company runs on a very, very strict financial discipline. Like you said, we are debt averse. That's because it's fiscally very prudently run. And that's the same deal. I mean, we make sure that, we have the right advances. We make sure that we just have an eye on the working capital as we move forward.
Okay. Now, there is uncertainty around tariffs, but there is uncertainty around the negative impact on the tariffs as well with Donald Trump is what he's done overnight, right? For China, for Jerome Powell, etc. So my question to you is, are you guys really worried about what will, and maybe it is a good thing to be worried about, but I'm just asking, are you worried about what's happening in the US geography and what it could do to your US plans as well as export plans? Or do you believe it's business as usual out there for you?
I don't think business as usual exists anymore anywhere in this world. And I think you have to be having your eye squarely on what's going on in the US and everywhere else in the world, right? Now, the good part is, Neeraj, we have a manufacturing facility in the US. We have substantial manufacturing facility in India. And we are closely watching the moves around tariffs and then modulate our response accordingly. From our perspective, what we can do is we can, go in and dial up our production in the US or dial down our production in the US, and likewise for India, and make sure that we deliver again on the EBITDA control parameter that we are going to drive our business on.
Awesome. My final question, and I can ask you about battery energy storage, but maybe we'll do that another time, because in a conversation that we've had with your colleague and co-founder or your founder, Mr. Doshi, he mentioned that BESS could be as large as solar. So I'll save that for another day. But due to paucity of time, one final question, Amit. Global. Europe is coming back on capex of all kinds. My question to you is, would you believe that emerges as a large market for a player like you, which has got global capabilities and ambitions?
So Europe, we continue to have an eye on. At this point in time, it is a very small part of the overall pie. But we do believe that Europe has a huge potential, and especially for some specialty modules that we have, which are flexible in nature. And some of these niche products, we are sure, are actually going to have a very strong offtake in Europe. So you're right, very big market, which we have to have an eye on.
Well, wishing you all the best for that. I know today time is truncated, or I would love to have a slightly extended conversation at some point of time, Amit, on all things solar, if you will, or maybe even battery energy storage systems. Thank you so much for speaking to us today.
Pleasure. Always a pleasure, Neeraj. Thank you very much.
Thank you so much. And viewers, thanks for tuning in.
Hello and welcome to NDTV Profit. You're watching IPO Adda, and the big IPO for this year is Ather Energy. It's one of the largest IPO coming after a few months because of the kind of market volatility which we saw. The IPO, which opens on April 28th and closes on April 30th, is priced between 304 to 321. It's a fresh issue of 2,626 crores and an OFS of 354.8 crores. So total size is little less than 3,000 odd crores, which is coming in. And at the upper end of the price band, the company is valued at around 12,000 crores. And joining me today is Tarun Mehta, who is the ED and CEO of the company, and Sohail Parekh, who is the CFO of the company. Gentlemen, thank you very much for joining us on NDTV Profit. Tarun, let me start with you. It was a much anticipated IPO, but you had market volatility coming and this, giving a pause. And then you have cut down on your size of the IPO as well. And also, if you can take us through the valuations.
Right. So, we began the book building process a few months back. While there was obviously volatility for a while, bankers advised us well on both timing and the price. The size we've largely kept intact. Recent quarter's performance gives us a lot of confidence. If you see our Q2 and Q3 performance, so we decided to reduce our debt repayment because we have more conviction on our accruals than ever in the past. But otherwise, all our growth investments have been kept intact, and that's how we are going in the markets. Volatility aside, I just want to make a comment. What we saw on the road when we went and met investors and told our story is that the conviction on India consumption, conviction around India electric, and especially two-wheeler electric, was very, very strong. And that's what gave us the final conviction to launch the process.
The last round which happened, in which you had given it to the India-Japan fund, the adjusted price was around 267. You are coming at 321 rupees at the upper end today. Give us a sense of the valuation and why you've decided to take a premium over the last round, given that things means we are in a very uncertain time here with respect to global markets and foreign flows. And while there is a conviction with respect to electric vehicles and two-wheelers in particular, the two-wheeler category is also facing a lot of headwinds in terms of backlashes with one of your competitors.
See, the overall two-wheeler story, I think two-wheelers had a great FY25. Dispatches and retail grew at a very healthy pace. Scooters particularly continue to be very strong, which is where Ather is largely focused today. The electric scooter market, however, obviously grew much faster than the petrol scooter market. So this remains one of the strongest growth stories in our industry today. So I think all those pieces add up really well. Particularly for us, in the first 3 quarters of FY25, the data of which is there in our prospectus, you will see an incredibly strong growth, and that's what's giving us a lot of optimism and excitement. On the back of a new product launch, Atherista, which is this new family convenience scooter that we launched, we've seen a significant uptick in volumes, market share, and that's what's also driving a lot of store expansion for ourselves. So the last few quarters have been very satisfying from a business growth perspective, and what's ahead for us is a lot of expansion again on the back of a new product. So this is where our conviction comes from. On the price, once again, I'll say the same thing. Nobody can time or nobody can predict the market. This is down to the advice, the solid advice that our bankers have had as part of the book building process.
Sohail, you're raising 2,600 odd crores. Can you give us an idea of where it's going to be deployed?
So we are very focused on the growth that Tarun talked about, with the expansion in distribution, with the solid response that the company has received on Rista, our new convenience scooter. We are seeing very strong demand. On back of that, we are working on new platforms. We are working on strengthening our R&D. We are working on further brand building. So as you would have seen, the bulk of the investment is going for our new plant in Chhatrapati Sambhajinagar. And we continue to invest in R&D. That is our strongest point, and we continue to bet on that with a host of development happening across product, across platforms that we have already laid out in the story. And we want all of us, we urge all of you to look at the story, look at the document, and see how strong conviction is in our strength and strategies that we have laid out.
It's coming through in the kind of investments that you're planning as part of the proceeds which are going to be used, because you are the 4th largest player after Ola, TVS and Bajaj. And the kind of conviction that you're putting in investing in new capacities and building new capacities, gives confidence which you have that you're going to grow at a much faster rate. So give us a sense of the kind of the growth rate that you've been growing at, and going forward, how do you plan to ensure that the market share which you have between 10 to 11% at this point in time, it can be scaled up further?
Right. So you will see that with Rista launching last year, this year last FY25, our volumes have shown already in the first 3 quarters a very healthy amount of growth. There's an almost 40% growth in volumes in the first 3 quarters. And remember, Rista launched just in the second quarter. So there's been a very significant jump, which has also led to an overall better market share. So if you see a recent month's performance, and this data is public on the Vahan portal, you will see the business consistently hitting 13, 14, 15% market shares. We continue to solidify areas where we are strong, for example, like the south of India, where we've been one of the, if not generally the largest player by volumes in all the 4-5 states put together. And with Rista expanding in a big way in the non-south markets, particularly West and North India, where recent successes and volume and market share growth in states like Maharashtra, Gujarat have been very heartening. So this is where growth is coming from. The biggest lever for us is expanding our distribution. And we mentioned, we've walked people through this in our document, in our prospectus, that Ather's achieved this kind of market share and this kind of volume despite a fairly limited distribution in the past. Our distribution was limited because we had a single product which was more focused in the southern markets. But now with Rista, a very large part of the country opens up to our products. We believe that the Ather brand is going to be equally successful there, and which is where we're very bullish about adding new stores and expanding rapidly.
You spoke about distribution, 280 odd experience centers that you have in India. Where do you want to take these experience centers? Because your competitor is talking about 4,000 touch points. How do you plan to do it? And I remember, our interaction earlier when you said that distribution plays a key role in expansion and market share. And you've been able to do that in Maharashtra and Gujarat with the recent launches. So how do you plan to expand your touch points across India?
So on distribution, we have pursued a capex light strategy. We do not, for the most part, we don't run stores ourselves. This also keeps operations simple and also has more partners working with us. So it's a dealer-led model where dealers put in the capex and dealers invest in the opex. This also makes for a relatively easier expansion with their support. Where we are largely expanding, I would say once again directionally, it's the non-south markets for us. You would notice that our throughput per store, if you were to calculate, has been substantially higher. Distribution generally is linked to how many products you have. The wider your product portfolio, easier it is to have more stores that can be profitable independently. And generally as a company, we've been very focused on profitability. This has been something we've kept right up in our radar. Adding stores, one of the most important question we ask is this store going to have profitability in the near term? And only if the answer is yes, do we progress ahead. With Rista, a lot of those stores are now saying yes, which is why with dealers, we are adding a lot of distribution, especially in the recent months.
Soil, can you come in here and give us an idea of the kind of break-even point?
One more point I want to add here.
Yeah.
Yeah, sorry, just one more point I want to add here. India is a very large market, and I think our ICE peers have really given us a glimpse of the kind of potential that we can have with distribution here. Also, India is a very large market with very strong dealers and distributors. And I think many of them have shown an enormously strong interest. Some of the strongest dealers in the country are today Ather partners. So it's on the back of partnerships like that we're very bullish about expanding pan-India super fast.
So, and just to add, at Ather, we are very, yeah.
Go ahead.
Yeah, so at Ather, the right unit economics and getting the operations right has been our foremost priority. And if you would have seen, when we started, we didn't started the selling of the product very aggressively till we got it right in 2022. And that strategy continues. Our top focus is getting an unit economics right and improving it day by day